Welcome to this episode of Equity Mates Investing Podcast. Today we're doing a deep dive on Catapult Group. If you enjoy this content, make sure you subscribe.
All right, Ren, well, where do we want to start with this company?
So, Bryce, you know a company is swimming in pretty big circles when they've got Patrick Mahomes, Mbappe, and Jason Tatum on slide 3 of their investor deck. Now, trivia question
we could put them on slide 3 of ours if we wanted.
I actually did. Could we? Surely there's some licensing about their images. Now, before you Google them, who are those 3 people?
I know Patrick Mahomes. He's the quarterback for the Kansas City Chiefs.
In the NFL,
yeah. In the NFL. Mbappe, not to be confused with Mbop, the song but from Hanson.
Okay, I don't know if anyone was getting that confused.
He's a soccer player and he did play for Manchester United. Don't know who he plays for now.
Played for PSG.
Pretty sure he played for. He's French.
Still plays for PSG.
Okay,
yeah.
Still plays. Did he play for United?
Don't know, man.
Okay, but he's
Soccer's
French.
Not my sport.
French, one of the most well-known soccer players in the world. If you weren't familiar with him, and Jason Tatum is a wrestler.
No, he's a
movie star,
basketball player for the Boston Celtics.
Right.
Yeah.
Who am I thinking the movie star? Jason
Statham.
Nice. I was wondering why they'd put a movie star for a sports analytics company.
Yeah. So this company, this small Australian company, works with some of the biggest sports franchises and sports leagues in the world. In fact, it provides tracking and analytics technology to 40 sports across 100 countries and 4,100 teams globally.
Way bigger than I thought they were.
Yeah, it's pretty impressive. So let's take a step back and talk about where the Catapult story began.
So the story began with a research project in 1999. It was founded by engineers Sean Holthouse and Igor van der Grient. The pair were working with the Cooperative Research Centres during a project with the Australian Institute of Sport, the AIS, seeking to replace laboratory-based performance testing with microtechnology, as athletes were not really exerting themselves to the full extent that they were in lab conditions compared to if they were actually in competition. Nothing like the grit and determination from a bit of competition that pushes you to the limits. So that was the founding story, and from there, Catapult was launched as a business, another project coming out into commercialization, and that was in 2006. Then they listed on the ASX here in Australia in 2014.
Yeah, in their time as a listed company, I think it's fair to say they've had some fits and starts. They ran up massively in the few years before COVID from memory, and then they came off a bit. They've also acquired a couple of companies, a US company, XOS, a UK company, SBG. But really what they're known for today is the trackers that the athletes wear on the back of their shirts.
Yeah.
You may see it sometimes in the broadcast. You might see a trainer taking out the tracker and putting a new one in.
Right at the top of the base of the neck.
Yeah. The classic is if a player rips their jersey and they have to replace their jersey, the trainer will take this black little tracker out of the old jersey and put it in the new jersey. And it is exactly what you think. It's a tracker it really started as a GPS tracker, and now it tracks a whole bunch of different stuff. But that was really the foundation of this company. So today they've got technology, athlete monitoring technology, which we sort of spoke about, a few different models, the Vector Pro, the Vector Core, the Catapult one. But really what they are is attached to athletes, tracking athletes. Then they've got a tactics and coaching suite of technology as well. It's a lot of video analytics that I guess now more and more probably uses AI to identify what opposition teams are doing, what your team is doing, what they should be doing. So it's really for coaches. They also have specialized motor racing technology. So they've worked with the F1 for a long time, and they've just signed a deal with NASCAR as well.
Wow.
And it's called Race Watch. It's their race analytics software. So yeah, they're basically providing, I guess, a technology and analytics layer to professional sports. And then that all rolls up. So all the data from the athlete monitoring and the video analysis all rolls up into their software platform, the Catapult platform. And these teams and leagues are essentially buying subscriptions to that platform. So in some ways, it's a software as a service product with all these other like hardware and stuff associated.
It's fascinating to see the size of the data analytics teams in these sports teams now.
Yeah.
Like if you just go on, you could easily just go on LinkedIn, type in Essendon Football Club, click on people and just see just the amount of people that are consuming this data. And if you watch them in the box and listen to the coaches as well, how they're doing it in real time as well, it's just fascinating. Just serious analysts just crunching numbers.
Yeah. So the Moneyball movement obviously started in baseball, and that's that sort of real data analytics framework. It's really moved to the NFL now as well. Like there are some teams which are known as like Moneyball teams, and like analytics now plays a bigger and bigger role. And not to get too into the weeds, but there's this like one specific decision. Do you go for it on 4th down where you normally kick it away? And the analytics community has like come in and with all their data have said basically what is conventional wisdom is wrong. And like you see some teams clinging to conventional wisdom and then other teams embracing the analytics. And I reckon that's only going to happen more and more and more in more and more sports. It's going to be like once you assess like the likelihood of, I don't know, I'm trying to think something in AFL that would be similar, but like, I don't know. There'll probably be an analytics framework that comes out and says that winning a ruck tap isn't actually valuable. And all of a sudden, 3 or 4 teams will just play 4 small midfielders or something, you know? Like it's...
The third quarter is not the premiership quarter.
You actually want short full forwards.
Yeah.
I don't know what it is, but like analytics are changing these sports, changing the way that these sports are played. And that's not Catapult. Like this is a much bigger movement than Catapult. But this whole shift towards like data and analytics, Catapult are obviously involved in.
Yeah, very involved. They claim that they're 5 times the size of their nearest competitor with... So that's incredible market share.
Yeah.
And I think that then flows onto a 95% retention rate. And if you think about just the stickiness of this, I assume the stickiness, you've got the platform that you're paying for.
But you don't have to assume the stickiness.
It is
They've got a 95% retention rate. Which 5% churn, I don't know. It feels pretty good.
Yeah. Great. Because you've got... Not only it's hardware and software. You've decked out your entire team with all the hardware. You've made all your training jerseys fit it nice and snug. You don't have to change all that.
I don't think that's. I think it's
huge
more.
Cost.
I think it's more you have
and then S8,
years
the SaaS platform.
I think it's more you've got years and years of data on players, and if you were to go to a new provider, you might lose that. Yeah. But also the fitting of the jerseys is very important.
So some of the big teams and leagues that use this technology, so you've got the EPL, the Premier League, you've got the Major Baseball League, MLB, Formula One, AFL, NRL, NCAA. What's that?
It's the college football, college sports in America.
Right,
yeah.
NCAA.
NCAA. Yeah.
NCAA.
Yeah.
College sports. Across the board.
Well, the NCAA is the body that manages college sports.
All sports.
Yeah.
Oh, wow.
Yeah.
There you go. And all 32 NFL teams.
Yeah.
Wow. Some pretty big hitters in there. I mean, what's left? There's obviously heaps of sports. But I mean, they've really captured...
All right, what's missing? Every football...
NBA is the next big one.
Every soccer league in the world, aside from the English Premier League, isn't listed.
Yeah.
Basketball and hockey in the States isn't... You didn't mention?
Ice hockey.
Yeah,
that's a big one.
It is a big one.
Swimming.
Tough to... Where would you fit the tracker?
Back of the Speedos.
No, I think, look, they obviously work with more leagues and teams than this.
40 sports.
But these are probably some of the bigger names. So these are the ones that they put in their investor deck as a proof point that, hey, we're used by the biggest. Yeah. So let's talk about the financials, because everything that we've spoken about, like professional sports is just like there's so much money in it. Analytics and tracking is sort of so important. So you kind of think this company should be massive.
You should think so.
It's 5 times the size of its nearest competitor. It's got a software platform that everyone loves. 95% retention rate. It should be massive. But it's a $350 million company.
It's getting there.
Yeah.
Yeah.
It's growing.
It's growing. So revenue, so let's look at the COVID period. Year before COVID, they had revenues of 95 million. COVID hit and revenues fell 29% to 67 million, fell further in 2021 to 50 million. Since then, the last couple of years, they have had pretty significant revenue growth, though 2022 revenue growth of over 50% to 77 million, and 2023 they had revenue of 84 million, 10% growth. That doesn't translate at the moment to profit. They are unprofitable and increasingly so over the last couple of years.
Yeah. So you mentioned there that 2019 it was doing 95 million a year in revenue, and then that dropped significantly over the COVID period and hasn't recovered. But how about this as a fit and a start? So as we said, it listed in 2014.
Yep.
Around 50 cents. It got up to $4 by 2016.
Oh, wow.
Yeah, massive. Like if you were an investor, you were loving it. It fell then down by 2019 to 60 cents, so almost back to the IPO price. And it's gone, up and down. It's now at about $1.40.
Okay.
Yeah. So it's a company that has so much potential, but I think it's fair to say has never really lived up to that potential.
It often pops up on a lot of small cap fundies lists.
I don't own it, but in researching it for this, I see it. I'm like, these professional sports companies are just making more and more money. That's going to give them more and more money to pay for things that make them better. This seems to be something that all professional teams seem to be in unanimous agreement that this makes them better because they keep paying for it. So as they get richer, Catapult should be able to charge more. Catapult should be able to use that money to make better analytics equipment and software. That reinvestment cycle should allow them to get bigger and bigger than their competitors who aren't making as much and can't reinvest as much. You overlay things that are expensive but really valuable like AI, you would expect the biggest players to do the best. I understand the thesis. But I look at this company and I say that thesis, aside from the little AI overlay, that thesis was true in 2006. That thesis was true in 2016, and it's going to be true in 2026. But as an investment and as a business, it's never really taken off.
It's a good point. 40 sports, 100 countries, 4,100 teams. And the sport, the EPL, MLB, and Formula One, these aren't trivial leagues. They're not playing the Farah League in Riverina. and with 95% retention, 5 times nearest competitor, you'd feel that there's some pricing power there.
You would say if Catapult had come to market in 2006 and said, we have unbelievable growth opportunities. We're going to sell to the Formula One and the NFL and the EPL and the MLB. You would have been like, wow, that growth run rate is huge. And if they can do it, there's so much potential. But they've done it. They've sold to those leagues. They're tracking those players. Yeah. And so you say, if this is what the business looks like when they're there, what is the growth? Yeah. And, like for some of these sports-related small-cap companies, so like, for example, HitIQ, you would say they're going professional, and then the idea is you leverage the halo effect of the professional game to sell to the amateurs and to sell to kids. So HitIQ is that concussion mouthguard. Yeah. And you'd say, okay, so the growth is selling down to lower levels of sport. I don't think you could say that about Catapult. Like, the ANU Griffins aren't going to be buying expensive analytics equipment. One, because they can't afford it. But even if they could afford it, they don't have the team in place to actually analyze the data. Yeah. So for me, it's like the growth has to be there are more professional teams that we can sell to. But if they're already in 100 countries and 4,100 teams across 40 sports, they might be pretty saturated. So then the story has to be, we can increase our revenue per customer, our ARPU, our average revenue or annual revenue per customer. and it's like we can cross-sell them into other products, or we can raise our prices, or there's a pipeline of new innovation that we can upsell them on. And that's probably the question that I have. Because as an investor, it's not about, is this a great business, but it's, is this going to be a great investment from here?
Well, outside of speaking to Andrew straight after this, we should get Adir Schiffman, who is the executive chairman, to come on and we can do an uncovered, or maybe just get him on EM chat for a bit and actually ask these questions direct.
Sure. Well, depending on how our conversation with Andrew goes, he might not want to.
That's true. I'm sure he will want to. He actually has I'm sure he will. Welcome back to Equity Mates. We're here doing a deep dive on Catapult, and we're excited to bring in our expert today to help us unpack the investment case. We're bringing in none other than returning guest, Andrew Brown. Andrew, welcome.
Thanks, Bryce. Morning, Ren.
Morning, Andrew. Looking forward to this one.
I am pumped for this one.
Yeah.
I don't mind telling you.
Yes. Well, Andrew is the executive director at East 72 Holdings and has come in today on fire, ready to jump into this. And Andrew, we usually have 4 questions that we kick off with, but you've said that there's a bit of background here that you want to get stuck into first. So where do you want to kick off?
I want to kick off with the fact that there's a massive investment lesson for everybody in Catapult, which is that you need what's called second level thinking. If you want to understand what that is, you can get Howard Marks from Oaktree's Memo up, 9th of September 2015, and he explains what second level thinking is. It's clearly that you don't just look at the obvious, that you dig underneath the obvious. Okay, to the next level and then the next level again. And what you'll see when I go through the run up to Catapult and Catapult itself is we're using that level of thinking. Okay, so the second aspect of Catapult is Catapult was created or founded in 2006. The most formative moment that lays out Catapult's business and why it exists and why it can exist and why it has a massive runway happened in late 1991 in the UK.
Nice.
Okay. Yeah. Why? Why are we going back 32 years? What happened in late 1991 is that the rights for UK soccer were coming up in 1992, and the incumbent TV company, which was ITV, was paying £11 million a year to broadcast what was then called Division 1 live games. The major clubs in the UK said, that's ridiculous, we need much more money to sign a new contract for 1992. And of course, that was the genesis of the biggest monster in world sport, the English Premier League. Okay, what happened? So 11 million quid a year, there were various bids and people started negotiating, the clubs got involved, and the FA, which did not run the Football League then, okay, got involved, and of course along came Rupert Murdoch. And Murdoch agreed to pay 60 million quid a year over the next 5 years for live games in the English Premier League to bolster B-Sky B, which was still fledgling. Okay, so the price of sport went up 5-fold in the UK. In 1993, Murdoch used exactly the same tactics to take away the NFL from CBS, who'd had it for 56 years.
Wow.
You just bid it out of the park, okay? Because, as Rupert Murdoch said in 1993, you don't beat live sport with old movies. And he's absolutely right. And if you look at virtually every sporting strategy across the world, it's basically to bid for the key sport in that market. So in America, it's the NFL. Obviously, the other sports are relevant and interesting, but they're much more regional. NFL fits the bill. In England, it's the Premier League. It's a strategy that's used by Vincent Bolloré of Bolloré and Vivendi. It's exactly the same thing. He's got rid of French Ligue 1 soccer. They only want the Premier League, and of course he's taking over the major streamer in Africa. So this is a well-known strategy. What does that mean? What that means is, it means that sport is investable because there's so much money in it. It's being paid for by media companies and of course now streamers. Okay, so in 2008, Abu Dhabi bought Manchester City. It's the amount of money. In 2011, Qatar bought Paris Saint-Germain, and obviously a couple of years ago, Saudi bought Newcastle United. To give you an idea now, from that 60 million quid a year, the UK Premier League rights are 1.67 billion pounds a year just for the UK, and the international rights, which in 1992 was zero, are now 1.76 billion pounds a year. In other words, more than the UK rights. That's what's driving everything in sport. Okay, so there are 5 or 6 key changes to the landscape in the last 5 or 6 years. First of all, professional investment in sport, which was previously non-existent. There's no way professional funds would have invested in sport. So to give you an idea, only 2 of the 2024-25 English Premier League teams are owned by English people.
And when we say 2, it's 2 of 20.
2 of 20.
Yeah.
Okay, so they're Brentford and Brighton. Okay, and as I've told you before, both the guys that own those made all their money from sports betting. Okay, all right. 7 of the 20 teams are US owned. Okay, usually by private equity or a high net worth, very ultra high net worth individual. Okay, so they're in. The second key change to the landscape is the massive salaries and payments to the players. Okay, the players are the biggest winners out of this, as you can imagine.
Yeah.
Okay.
For context, for people who aren't familiar with footballing salaries, they get talked about in how much they get paid in a week.
Yeah.
Because they get paid so much, like £900,000 a week.
Yeah, absolutely. Okay. So, and that works, of course, you know that in the NFL as well. So it's exactly the same across American sport. You know the salaries there. So there's only one sport where the assets can be sold, of course, and that's football, soccer. Okay, where you can actually sell, your star player to another club for, many hundreds of millions of pounds. So the most expensive player in the UK Premier League is Declan Rice, who moved from West Ham to Arsenal for 105 million quid. The third thing is, so how do you invest? There's that. The third thing is sports betting. Sports betting's been liberalised everywhere, okay? And it's grown very, very sharply everywhere. But there's one thing you need in sports betting, and you can see here we're getting a bit closer to Catapult. You need data. You actually want to know how many passes Declan Rice made, how much running Declan Rice did, how many shots on goal Declan Rice had. And that guides you. I'll give you the hint. The 2 guys that own Brighton and Brentford were one of the first originators of sports data in football. Okay, they helped create what's called XG, expected goals. Okay, and they used to bet on the basis of expected goals between the 2 teams. Okay, so there's loads of data stats. Now I'll come on to who creates those a bit later on. The fourth thing is the change in media distribution. This stuff is now getting out of the hands of free-to-air. It's moved categorically to streamers. Okay.
I think the best case study of this right now is the NBA rights that are being negotiated, and Amazon and everyone wants
absolutely right. Yeah. Okay, this is why I've been excited by NBA, and I've been excited in the past by Madison Square Garden Sports, who own the Knicks, and the Knicks are actually half good again, so that's a start. So the NBA is the big kahuna, to be blunt now. NFL's still obviously the big gorilla in the room, but the NBA, because of now its rights being negotiated, as Alex says, it's really important to understand the streamers are now playing. Yeah, so sport is going to be distributed by Apple TV, by Google, by Netflix, and by other guys in this, as well as specialist, over-the-air streamers like B-Sky B in the UK and obviously KO. Look at how sports changed in Australia. You've gone from having Fox Sports to Fox Sports Streaming, which is KO.
Yeah.
It's changed completely in the space of what, year and a bit?
Yeah, it's shit for consumers. This is a side point, but in Australia, it's actually now Optus Sport, KO, and Stan Sports if you want what you previously had.
Yeah, I'm sorry to tell you, if you think the anti-siphoning legislation is going to carry on forever, it ain't. Okay, so I mean, free-to-air television in Australia has got to reshape itself completely because it only exists off news, reality TV, and sport. Yeah. And the sports rights are too expensive for them; it don't make money. So that's a problem. And the fifth thing, and this is really relevant for Catapult. What are the big new things that are being monetized in sport? only in the last 2 to 3 years, and one is literally this week. We're recording this on the 31st of May. The first is women. Women's sport is now huge. It's credible. It is big business for television. Okay, women's football in particular in the UK is massive, and of course, well, in Australia we kind of have a team to be proud of. You know, we got our players. We got 3 Matildas play for Arsenal. Arsenal, when they play Spurs in the women's game, they put the game on Emirates. It sells out.
Yeah.
60,000 people go watch Arsenal women play big games. And it's the same with Man City women, and it's the same with Chelsea women, who are obviously the benchmark in the UK. So women's sport, and US women's sport, is coming back. You know, it's been through lulls, but it's coming back, particularly in basketball. Okay, ever heard of Caitlin Clark?
Yes.
Yes.
Who hasn't?
There
Yeah.
you go. Who hasn't? Well, that's why. There's now a women's national hockey league. And I've got to tell you, you know, to be blunt, blokes love watching women, you know, knock each other around. You know, rugby league, you know, football of one sort or another, and obviously ice hockey coming up. The second thing is US college sport. This week it's announced that US college athletes can be paid. Okay, and there's the NCAA have settled a lawsuit against them for basically, in effect, stealing the athletes' money. Okay, so there's going to be back payments made of over $2.7 billion US to NCAA athletes, you know, which is most obviously football. You know, if you've been to America, college football is gargantuan. Hold that thought, okay, because it's relevant to Catapult. So, how do you invest in all this sporty stuff? Okay. Number one, you can invest in the sports or the leagues. As we've said before, there's only 2 of those. Formula One and now the merged WWE UFC, which is called TKO. Okay, so not a bit hard. Number 2, you can invest in teams. Okay, there's various listed teams around the world. Manchester United in football, the Atlanta Braves in baseball. There's quite a lot of European football teams that are listed, including the Champions League finalists Borussia Dortmund.
The Brisbane Broncos.
And there's the Brisbane Broncos. But by and large, they're not great investments, okay, because you're not really investing in the sport. You're investing in a group of egocentric people who are going to take the money they make and spend it really badly.
In this case, you're talking about the sports administrators for the club. Yeah,
exactly. So you can't really get into that. Thirdly, you can invest in data suppliers. Okay, there are 2 listed data suppliers. There's Genesis, which is listed on the New York Stock Exchange. GENI is the stock code, and the 10% holder of that is the Australian company Caledonia Investments.
Oh, no way.
You know, as in Will Vickers, Mark Nelson, and friends. And the other one is called Sport Radar. SRAD is the stock code. It's listed on NASDAQ. It's based in Switzerland, but listed on the NASDAQ. It's got a market cap of $3 billion. It is a massive data and software supplier for sports gambling, okay, to reset the odds on the game as the game goes on. So that's quite interesting. The biggest stats supplier is a company called Stats Perform, and it owns the major stats supplier in the English Premier League, which is called Opta Sports, which you would have seen on TV. Okay, it's owned by a company called Vista Equity. Guess what? It's private equity. It's not listed. The fourth thing is you can invest in gambling on sports. In other words, you know, a points bet, you know, those kind of guys. Look, by and large, they're not particularly great businesses, but the barriers to entry are pretty low. Okay, you need capital, obviously, and some people do it better than others. But, you know, obviously the market's opening up and everybody's dog's going in, so the barriers to entry are very, very low. So by and large, I don't think they're particularly great businesses in these days. They have been in the past. And the fifth, which is where we're now going to arrive after all that in Catapult, okay, is you can invest in the technology that the teams must have and which has extraordinarily low marginal cost to the team, okay, but they've got to have this tech, and I'll explain why in a second. You might think about, hey, that's quite interesting. I've seen this model before. Low cost, $20,000 a year, to a team that pays one guy £100,000 a week. So it's, have you seen that model before? Yes. Transdyne, the US airplane parts supplier. that sells individual pins to Boeing and others for outrageous sums of money. They have massive pricing power because the overall cost of their stuff isn't relevant. Okay, I'm going to suggest to you that Catapult and its competitors are in a similar boat. Okay. Now, why is this stuff a must-have? Why is Catapult and its competitor stuff, why is it a must-have? Well, hang on a second. If you're paying 105 million quid to buy a player, you're kind of going to want to look after him. Okay? So you've got to keep him fit. You've got to measure everything he does. Okay? You've got to measure everything the team does. Okay? So, obviously, how their their VO2 is, obviously their general fitness, their heart rates, everything else. You've got to measure where they are. Okay, where are they on the field? Are they actually running where you want them to run? So this thing evolves really quickly from just keeping a check on your individual players to morphing into tactics. Okay, that the player's not going where you want them to go. And so you've got to have the gear in place to be able to make that change and make that change in game. Let alone, of course, the fact you do all this stuff 4 to 5 days a week in training. Okay, so that has clear application for soccer. It's got clear application for American football, most obviously. Guess what? It's got application even for basketball.
I think you don't need to run through all sports. I think it has application for every sport.
Everything, okay? So the next iteration, of course, well, it's not the next iteration because it's here already. You use AI for predictive, for predictive technology, okay? So it's not that expensive and it's absolutely essential.
Now, I want to pause here because I think, we sort of, in these conversations, we ask what's the bull case and what's the bear case.
Yeah, absolutely.
And we're forming like some building blocks of the bull case here.
Yeah.
I want to just ask a question about the flip side because everything you've argued here, I completely buy, and I completely buy that the tech is must-have. What is missing from this conversation is that Catapult itself is the tech that is needed because what you're talking there, GPS tracking, VO2 max, like Bryce is trialing a Whoop wrist thing for a month. The tech is becoming kind of commoditized at this point.
No, part of the tech is becoming commoditized. Okay, Catapult are the global leaders in wearables. Okay, and so it's essential that what their wearables, you see the guys take their shirts off and they've got a kind of vest type thing underneath. The wearables are, the wearables, they're not commoditized, but they're not super high value. Okay, the value comes in the software from taking the data that the wearable actually produces and then using that data. Okay, so there's the first derivative of that, which is Lesky's being really lazy this afternoon, get him off the field, to, obviously, as I've said, the predictive stuff that you plug all that into AI and you work out that, you work out that basically the left back for, Chelsea is really lazy and just not doing the job and we're going to target him. And you know how that works. I mean, even in rugby league, this stuff's used in rugby league, and the targeting of individual players in rugby league. So the bull case is that the runway is huge. Okay, that's the fundamental bull case, and that's why I spent a bit of a while going back through 34 years of history as to how did the runway get so big, and is that going to change? No, it's not. It's not going to change.
Just on that though, we were speaking before the break about looking at the the sports that they're already involved in, and it's like all the big ones.
Yeah, it's
all the
40
players,
sports.
all the codes.
They and their key competitor are in 40 sports.
But they're 5 times as big as their key competitor.
The key competitor is about 4 times bigger in revenue than Catapult. Okay, and I'll explain where the differences lie between their key competitor is called Huddle, HUDL, and Huddle is owned by its largest owner is Agile Sports Technology in the US.
Because that's what we were talking about before the break. It's like they have the biggest, richest sports in the world, all clubs, all players, male, female, and they're making $84 million a year.
Yeah, it's like, what's the growth opportunity?
They can raise
prices, but
20% a year out to, a long time into the future. Okay? The risk is that the runway's so big that there are other competitors come in. Okay, there are some subtleties in this. Okay, Huddle is their major competitor. Trying to find information on Huddle, wow, it's like the bloke trying to find his Bitcoin on that rubbish tip in Wales. It's pretty difficult. Okay, but we can work out their revenue's about 400 million a year. They've got 4 or 5 different owners, including Bain Capital, Excel. Private equity, and there's one listed company that actually owns 21% of them, which is called Nelnet. The carrying value in the last raise done in Huddle valued it at $980 million US, so about 2.5 times revenue. Okay, it's got a different business model because it's in a lot of high schools, and that's important for Catapult because when Catapult went wrong, it was because it was trying to sell to too many people. It was actually trying to sell to Bryce.
Right.
Called prosumer.
So I've just looked up their investor report because in the first half we spoke about how they're 5 times larger than their biggest competitor. And I wanted to make sure we didn't get that wrong.
Yeah.
In their own marketing material, Catapult call themselves 5 times.
Yeah. Now what they've done is because Catapult are not into the US high school market, and Huddle are huge in US high schools.
Oh, so the way they define the market.
So the way they define the market.
Okay.
If you have sneaky, you have to look where Catapult went wrong is they went away from elite sports. Okay, Will Lopez, who's the CEO now, basically they got out of the prosumer market. That meant that they cut their cost base dramatically. Okay, this stuff takes time to sell. You've got to sell. You need people on 2 legs running around making phone calls and everything else. But it sells itself once you get in there. Okay, and obviously the way is it's like any selling. You put a little bit in. So for example, they will sell some of their video capability for $10,000 a year. Okay, whereas the average is 40. But to get it in, and then when people see, oh my God, we want to go to the next level, well, that's another 10 grand. Okay, and it doesn't really matter. So that's the really critical thing is that they've honed their market down to the elite. The other massive difference between Catapult and Huddle is motorsport, because Catapult's acquisition of SBG 3 or 4 years ago basically gave them motorsport. So it's given them not just Formula One, which was the original, but they've now got NASCAR, which is massive. They've got IndyCar, and they've got various other things. So when you see Formula One, okay, and you see that Oscar Piastri's gonna have a 5-second penalty because he went out of bounds. He went over the curbs too far. Okay, that's all measured by Catapult. Okay. That measurement, and they get it virtually instantaneously. So just on Catapult, the bear case in a sense is the same as the bull case. It's that the market, the runway's so big that it will attract too much new competition, and they'll get blown away. It's not happened yet, and it's very obvious to me, to turn the bear into a bull case, the most obvious thing to me is that Catapult itself has a sufficiently open share register, but with the board still owning 20%, that if they worried about the environment and figured they wanted to shop themselves, they could and would. And I'll be blunt with you, I think that is what will happen as the end case. But we ain't there yet. There's too much more to squeeze out of it. Look, they're great. To give you an idea, there's 261 million shares on issue. They trade at $1.70 as we speak, 444 million market cap Aussie. The accounts are all in US dollars, so that's 300 million US dollars roughly. They've got 11 million of debt, so infinitesimal debt. Revenue's 100 million US dollars at 81% gross margin. Okay, so you've then got to basically sell the stuff, or you've got to administrate it and sell it. The churn rate is virtually non-existent. It's 3.5%. Okay, so it's extremely low, and the average contract lifetime 7 years. Wow, that's a pretty interesting product. So that their annual contract value, so not their revenue, their annual contract value is about 87 million US. So you've got 87 million with a churn rate of 3.5% a year, running for 7 years at an 81% gross margin. That lends itself, and some of you are going to be horrified, that lends itself to the old lifetime value cost of acquisition analysis that you find in SaaS companies, software as a service, because that's what this is. Okay. Now, You might be horrified that I'm coming here talking to you about Catapult, which makes $4 million of free cash flow and has a market cap of 300 million. And we're dealing US here. In July 2015, I wrote a piece when Xero was $17, having come down from 40, and I said, this thing's a screaming buy. And at the time, it had a market cap of $2.5 billion. It had 300 million of cash, and it was losing operating cash flow of $69 million a year. But it was so obvious to see what the runway opportunity was, and you could model it. And I was able to model it really easily to say, this is so cheap. And of course, the stock's $140 now, over a 9-year period. So that's pretty good. So yes, Andrew Brown, value investor, actually does do this kind of stuff. Okay, and I've done this on Catapult, and I actually get a valuation on Catapult of about $2.50 Aussie.
Okay.
All right.
Wow.
Now, there's two bits to the business, which I think everybody knows. There's basically the wearables, okay, which are the biggest part of the business, but they're the lower margin part. And there's tactics and coaching, which we'll call it the AI and the stuff on the screen stuff, which is much higher margin because it's a much bigger selling price, and obviously the cost of maintaining it's very, very low. So the step change for Catapult, when you read all the people that bag Catapult, is because they had various earnings downgrades in the past, and they were due to what I said was the prosumer. Catapult, there's 20,000 elite sports teams in their universe. They sell to about 4,200 of them, so 20% of the market. Okay, so elite sports teams are kind of category 1 sports teams in their specific sports. It's US college as well. Okay, that's the real key to it. It's kind of elite level. When I say elite level, I mean we are talking down to kind of tier 6 of English football.
Yeah.
Okay. Yeah, not just the Premier League. We're talking all the way down. So Scunthorpe United even buy stuff from Catapult, and they're in tier 6. So the market size they think is 20 billion US at the moment, and they expect that to be 40 billion by about 2026.
Oh, wow.
Yeah, wow.
And you can see, and the reason I spent so much time going through history is to show you why. Why is that not just something somebody's picked out of their posterior? It's real. As I say, the really tricky thing about Catapult is analysts struggle with it. Okay, it's the only listed company like this in the world. The others, as we've said, are data for gambling. Trying to get info on Huddle, I've said, is really, really difficult. There's a couple of other smaller companies that you can get data on, but they're all private as well. There's one in the UK called Sports Tech. I've got data on that, and it's much smaller than much smaller than Catapult. It's less than half Catapult size. Its brand is Apex. If you look at training sessions in the English Premier Leagues, you'll see some teams use that. It's mainly wearables. It's based in Northern Ireland. The attraction of Catapult to me is obviously I think it's undervalued. I think it has runways galore. I think the management are now really, really good and have executed. They're growing at 17, 18, 20% a year in terms of contract value and revenue. The fixed cost base is about $42 million US, and that ain't going to change much. And they've got all their costs under control, which was the main issue. And they've turned that around in about 18 months. And that's why there's a bit of cynicism. Is this real? Is this going to stick? Okay. And that's why the results which were reported yesterday were really important to me to say, yes, it is sticking. So we're now into free cash flow production mode for a SaaS company. That next year should be turning over 120 million US dollars. Why do I like it on the Australian stock market? Well, there's no domestic issue at all. Sure, they sell stuff to the NRL and everybody else, but this is a global company. This is a genuine global company. It shouldn't be listed here. It's just that it was created here. It should be listed in America. Okay, we are very lucky it's still available. It's not understood because the people that analyse it don't have the time to go into it in the detail that I do. Okay, and that's partly because of my passion for sports business as well as sport itself, and obviously English football. But they don't have the time to understand that. Okay, so I'm not critical of them. It's just, they've got 50 other companies to analyse. So they don't analyse it properly. They might look at the numbers properly, but they don't get what's driving the numbers. What's the real drivers of these numbers? The exciting thing as well is Catapult and Huddle, in a sense, are now going head on. Okay, they're head on in the English Premier League. Some of the teams use Huddle, Brentford, for example. Others use Catapult, Chelsea. But the big thing is Catapult won a contract to do sideline vision and analysis for the Southeastern Combine. The Southeastern Combine is the biggest of the 11 NCAA football combines in America. So it's got the real gorillas in it. Alabama, LSU, guys like that. Okay, and that's Catapult starts next season. Okay, and they will have had to have beaten Huddle out to do that. So they've won that contract. It's not in any of the numbers they've given to the market at this stage. Okay, if they can make that work, wow, the sky's the limit. Obviously, in the biggest sporting market in the world, which is North America, but don't forget Europe's huge as well. And you should see the teams they're selling to in Europe. The biggest irony of all, of course, is that one of the teams they advertised as selling to last year is Sankt Pauli, captained by the Socceroos player Jackson Irvine, and they've just been promoted from Zwei Bundesliga to the Bundesliga itself. And of course, they're the most left-wing football team in Europe.
Okay. I think my European football knowledge
Yeah.
is that one went over my head. But
stretches
that's
it.
okay.
Any team that along one side of its stadium has kein Fußball den Faschisten, no football for fascists, right along one stand, tells you where they're coming from. They're based just off the Reeperbahn in Hamburg.
There you go.
There you go.
There you go. And you're not allowed to tell me whether you've been to the Reeperbahn or not.
I have not.
Good answer.
I actually don't know what it is. Again, this is going over my head.
It's the red light district.
Oh,
in Hamburg.
okay.
So there you go. That's Catapult. And as I say, I think eventually it'll be taken over because it's too good a business. It's a global business. The Australian impact on it from the Australian stock market and what's going on in the Australian economy is zero at all. You need to look at it from a SaaS point of view. I've done that. It's most unusual that I would be invested in a company like this, which tells you that I think the underlying investment case is huge.
Yeah,
Love
it's
The
it's
downside
fascinating.
is, can they execute?
Yeah.
That's clearly it. It's the same as Xero was. Could they execute? Xero could execute. Can these guys execute? The market is cynical. But
Can they execute? And I still think that the question is competition. Like, as you mentioned there, the opportunity is so big. In America, you see Amazon is getting really into analytics in the NFL and, well, maybe they just buy a company like this. But
this is the easy way in.
For me, the bull case is they've got a head start. They've got a data moat. That data moat is incredibly important with AI.
Yep.
The bear case is if AI is so important and wearables are more and more of a commodity, there are bigger AI players that could get into this. So,
don't forget one of the biggest players in this stuff. I mean, we all think about Amazon and Google. One of the biggest players in this stuff is SAP in Germany.
Yeah.
Okay, so eventually these guys have got themselves. They've got the contacts and everything else. Don't forget, if you're invested in Catapult, the gear and all the data and all the systems they've got, it's like anything. Try. You don't want to change that quickly.
Yeah.
You've got to be given an amazing incentive to change. And when Amazon come knocking on your door offering goodies, it's usually a good idea to close the door on them because, there's a reason they're offering you goodies.
Yeah.
So, as I say, that's why I think eventually that Catapult's got a brand name, got the contacts, got the motorsport stuff, which is astonishing. That's huge, obviously, as you know, because you guys have looked at F1. So I think eventually that basically they're going to be too good to just let lie. And what's, $250 a share is $430 million US for the equity. What's $500 million to these companies? It's peanuts. It's nothing. That's what I can't believe. This company's only got a market cap, 300 million. I think even at this stage, not on investment fundamentals, but just on hype, it could be so much higher just on hype.
Yeah.
And now it's credible. Now it's credible again.
Well, it'll be a fascinating one to watch, Andrew. Thank you for coming in. Your passion for this company is coming through the mic, but we love that passion.
Yeah.
And I'm sure we'll be watching it closely, and I'm sure we'll be speaking to you again soon. So
Absolutely. And just to everybody, there's quite a few investment lessons in there. You know, we covered with with Howard Marks, with Transdime, and pricing power and what this kind of stuff means with Zero, and how Zero grew when it seemingly was rabidly overvalued but really wasn't. So there's a lot of lessons in this, and so if you spend a bit of time looking at Catapult, and I might write about it in the not too distant future.
Yeah.
It's brilliant for learning about investment, whether you think I'm talking a whole lot of rubbish or you agree with me.
Yeah, no, I love it. Well, watch this space, and if
go.
you do write about it, I'm sure we'll share it. So
We will.
thank you, Andrew.
Thanks guys.
Equity mind.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.